that's really what revenue management is finding, do you want just a broad spectrum of audience and everyone's just going to book it? Or can you capture some of those unique cases that find that value in your property and are willing to pay that premium? And that's really kind of that balance that's what I think of when I think of revenue management.
Yeah, I think that the breakdown of like bedroom segment is similar in that, most of them are in the 1 and 2 bedroom in this market. I mean, that's well over the majority of the units. So, but if you were to take a look at ADR, how does that compare to Honolulu? I mean, just 2 markets that are in the same state. I mean, and this is like in any state, right? But I mean, that's where all of this comes into play. You're 2 very stable markets. How are you operating those? You have to be looking at optimizing.
Welcome to RevLabs by PriceLabs.
Everybody, welcome back to another episode of RevLabs by PriceLabs. My name is Becca. I'm joined today with our lovely guests, Sarah and John, I guess co-hosts at this point. You've been doing this for some time now. We also have Saurabh here, who is our producer. Very thankful for all the hard work that he puts in behind the scenes. But today we have a really great episode. So what the RevLabs podcast does in this segment, we actually dive in and look at different markets within the US and analyze what's going on, talk a little bit about different impacts that are being seen in the market and how revenue managers maybe in these markets can approach different problems, the changes in the market and things like that. So today we're going to start, as we normally do, just taking a look at the entire US, and then we will actually zoom in to Hawaii. We have 3 markets, Honolulu, Kauai, and Maui, that we'll be taking a look at. And we actually have a local expert with us today. John, tell us a little bit about your experience in Hawaii.
I grew up in the short-term rental world with a small portfolio in Honolulu. And so that's how actually most of my colleagues initially knew me. But I still have a short-term rental, small portfolio out in Honolulu, Hawaii, that we've been operating for like 7 years now. And so all the trends look in the data. It looks similar to what our experience is, which is a good thing. And then obviously looking at some of the other islands in comparison is really interesting. But it's a pretty steady market throughout the year. There's no low season. It's kind of, there's a slower period and then peak period. So that's something that I like about markets I invest in.
Yeah, definitely makes sense. Well, cool. So let's dive in. So first we're starting by looking at the entire country. This, if you're following along online and not listening, you can access this data for free at hello.pricelabs.co. If you go to the resources tab, you'll see the STR index. Oops, I just clicked away from it by accident. But you'll find the STR index where you can look at entire countries. You can look at different regions within the countries and just give you sort of like an overarching view of performance, what's going on, different trends, how things are pacing. And we look at the US on a monthly basis on this podcast. So we aren't seeing a ton of crazy trends, but maybe what are some changes that we've seen since the last time that we've talked?
Sarah?
I've got to make this my bigger screen.
Okay. I mean, we're still seeing that trend overall where it seemed like the first quarter, the first 2-3 months of the year, things were pacing slightly behind. And then if you look at the January, February, actually, this only shows 2020, January of 2025. But then again, if you're looking kind of further out, can we look at yeah, exactly.
Fair. Sorry.
No. The what you just had at the pacing.
Pacing? Okay.
Yeah, so it's still holding true, right? If you look at the RevPAR pacing, still right now we are, pacing behind 2024. But depending on different markets here, sometime in April, it seems to shift, and then the latter part of the year seems to be strengthening is what we're seeing. So I guess I'm repeating what we've seen, not much in the way of changes.
Yeah, I guess there wasn't anything that really leapt out at me in terms of changes. The only thing when you were showing the compare on the compare visual there, the only thing that I was like, oh, the number of active listings still for January is higher in 2025. So that just kind of keeps growing. But yeah, no, there wasn't anything, I don't think, earth-shattering here that was too much of a change. To John's point, that there is that point a little bit, Q2-ish, where we are starting to see a little bit more strength there. And I think I'm seeing that at least in a lot of my markets. April in particular being just really strong. So not surprising that it is reflected in the entire US as well.
Yeah, makes sense. So we're still seeing that growth or number of active listings that we've seen was starting to really sort of level off. We were still seeing growth, but it was a little bit more steady than, say, compared to 2022 or even 2021. So we are starting with more listings than last year. Pacing wise, again, we've kind of said this over and over again, where we're seeing maybe RevPAR being a little bit lower or similar to where it has been in years past, but our ADRs are sort of holding strong. A lot of people have actually raised their rates, but for whatever reason, whether that's driven by the cost of travel, driven by other sort of economic things, occupancy, at least in Q1, is a little bit slower across the board. Drilling down to Hawaii as a state, we're seeing sort of similar trends. What are y'all seeing?
Yeah, I mean, I think the general trend overall, again, looking at the pacing chart here, January, February was slightly behind 2024. I will say, in terms of can we dive into some of the details?
Like the actual markets?
Yeah, actual market.
Yeah. Let's.
Or am I jumping the gun here?
No, you're totally fine. You're totally fine. I mean, like we were saying, there isn't really a ton at this broader level, but I think once we drill into the markets, we get to see a little bit more of the meat of what's going on. So let's kick it off with Honolulu. And yeah, John, take it away.
Yeah. I'll just say this as you were switching off. It looks like the supply has actually grown also in Hawaii, similar to what we saw. Right, it ticked up a little bit. It's plateaued, but if you look at the blue dot in January of 2025, it seems to have picked up a little bit. So that's a similar comment to what Sarah provided, and that's a bit surprising because with a lot of the regulatory impacts, there was a point in time where everything kind of slowed down, and so I might say that possibly regulations that are not being enforced is starting to have a little bit of an impact of people, kind of popping back in, whether it's legal or not. So one comment there.
Definitely makes sense.
Yeah. So let's see. So if we're starting out in Honolulu, let's see, what should we look at? In terms of
let's talk about we can talk about supply first, because we were just talking about supply, and we could even hop through the different markets, because this was something that I found kind of interesting in each of these different markets, is sort of how supply has grown. Now, Honolulu, John, do you want to give us a little bit of background on some of the regulations that have been put in place over the last few years here?
Yeah. Real quick, high level, within the past 2 years, quite stringent short-term rental regulations came into place. Highlight is that pretty much the only places where you could do 30 days or less is in resort zones like Waikiki, where most people know, and then there's a area on the west side, and pretty much all the residential areas on the rest of the island Right now, they have to operate at 30 plus days. There's a push to try to make it 90 plus days, and that's something that is not part of the regulation. So a lot of those, like, epic beach houses, those have pretty much disappeared from the inventory on Oahu, in Honolulu. And so that's why when we look later on at kind of the overall ADRs and stuff, most of the Honolulu inventory are condos within the resort areas. That's the vast majority of the supply. So what were you looking at, Becca,
Yeah,
in terms
so if
of?
we're looking at active listings, if we're looking at that sort of growth that we saw in the sort of overall Hawaiian market, we're not really seeing as much of that here in Honolulu, and that could partially be driven by some of the strong regulation. So if we're looking at March of last year, or 2023, actually, there was about 6,600 active listings. And March of this year, we're seeing 68. February, we saw about 7,000. So really a little bit of growth, but definitely not, if we're considering some of the other markets that we've looked at in this series, we've seen significant growth in places like Gatlinburg or various markets in Florida. And this is very, very stable, comparatively speaking.
And I'll say, obviously, the regulation, took a lot of people out of the market. And I think there's, kind of a lore, right? Everyone's like, don't invest in Hawaii, don't invest in Honolulu because of the regulations. And because I'm already in the market and I kind of understand how to navigate it, it's actually still a great market to get into if you do it, in the right area. You're not breaking the law and everything. It's actually a pretty good and, like you said before, stable market. So that's something to take away. I will say is there are markets where the media pretty much says this is not a good market to invest in. That's not necessarily the case all the time, and that's something that I'm seeing in Honolulu, and then we're actually starting to expand out into Kauai, and we're seeing something similar as well.
I have a question for you, John. So I'm learning just as much as everybody else here, and I'm really excited to be able to have kind of an expert here. But with that, are you seeing, when you say that it's a market to invest in, are you kind of thinking those Studio One, those smaller units, kind of like you were talking about how there is more regulation on those beach houses and things like that? So is that something, when you're talking about it being good, are you thinking more along the lines of those smaller units?
I actually believe like the 2 bedrooms are the nice sweet spots. So there's a saturation of the 1 bedrooms, and I think that's where, again, if we go to like the Honolulu ADRs, it's a lot lower than Maui and Kauai. And then I also think like 3 bedrooms it's bigger, right? But I don't think it commands that that additional premium for the real estate asset that you're purchasing. And so in these kind of resort areas, and I think this is probably true in lots of destination markets where the 2 bedrooms allow families to visit, but it's still more affordable than like the 3, 4, 5 bedrooms, right? So that's kind of what I'm seeing personally, and that's my sweet spot. So everyone, go invest in Hawaii in 2-bedroom condos.
Thank you for telling us all your secrets, John.
Well, I was just curious because you can see where the breakdown is right there, right? Clearly the bulk of it is in the smaller unit, and that's kind of what you had said, John. Like that's why you're seeing the lower ADRs in general compared to other markets. But when you were saying, oh, well, I still think it's a good market to invest in, I was just curious if that was, kind of that smaller. If you're going to do it, you're not going to go to those big 10 bedrooms, where you've got 2 units in the entire in the area. But yeah, and I totally agree about that. The difference between a 2 and a 3. We see that across many markets, right? To your point.
Exactly.
Yeah, I am surprised so the breakdown here for those who are listening and not watching. In this market, there are currently about 1,600 studios, almost 2,900 1 bedrooms, 1,000 2 bedrooms and only about 263 3 bedrooms, which is pretty crazy. So definitely 2 bedrooms seems to be a good sweet spot here. You're still able to get, it looks like, much higher ADRs than 1 bedrooms on average. But yeah, definitely makes sense. So we keep talking about this being a very sort of stable market, and we'll kind of repeat this as we're looking at Maui and Kauai. But when we say that, it's just not really like discernibly seasonal, as you would see in many other markets. Talk us through maybe how a revenue manager would want to approach a more stable market like this when you're not really having to chase your high season and then balance and try to pay attention to the low seasons and your shoulder seasons. Are revenue managers in Hawaii a lot less stressed, would you say?
Yeah, bro. They caught the wave. No. So I think the way I look at it is there is kind of a baseline that's the core revenue. And so like, you're not stressed that you're going to miss 1 month. And if for one reason you do, you can make it up the next month. So in terms of that, I think it's a stable market. What I will say, and I think the numbers, the graphs here don't really show it that much, and it's indicative of what's going on. I think a lot of the revenue managers kind of settle into, oh yeah, the summers, we're going to get a little bit more, Christmas, we're going to get more, but not really pushing it. And so I think that's why you're kind of seeing more or less kind of stable on average. But I will tell you that, June, July, August, the 2-bedroom, 2-bath condos, my portfolio, we have hit, somewhere around like 30,000 in a single month of gross revenue at times. So what I'll say is, from my perspective as a revenue manager, is understanding when those opportunities are to get that huge incremental revenue is kind of like, you can hit a grand slam over the peak periods and not just a little bit higher. And then during the slow months, then you're not stressing out that you're missing the entire year. So there's a different approach to it. But I think being just as aggressive and just as in tune with what's going on really helps you to drive up the revenue more than kind of what the market average is doing.
And I think, I don't know this market as well, but I think, when I am thinking about how I'm going to approach a more maybe non-seasonal market or more stable market is what we're talking about. I mean, I tend to think that there's more opportunity there for optimization, really for, really understanding and building out segmentation, right? So you're not going to necessarily see a blip, as much in, in a seasonal way. But if you're really understanding who your guests are and you're able to segment and understand their behavior, it gives you the opportunity to optimize in those ways. So that's where I think it's kind of an interesting, it's interesting in that way, right? Because, you might not have those huge spikes, but if you really understand who's coming, you're going to be able to, hopefully optimize your rates, optimize your revenue, and do all that stuff in a way that, might not be as obvious. So I think in a lot of ways, it's more of a challenge for revenue managers who are in these kinds of markets because they don't have the obvious gimmies when it comes to, peak summer or, Christmas. They really have to work and they have to do this year round. So I think it's even more challenging. It might be more stressful. I don't know.
Well, one thing I'll also say, because it's a stable market, right? So of course, there's a booking window, that the data tells you, but you actually have like multiple shots at it, because if you miss that booking window, there's that opportunities there again and again and again. So you get like 6 up at bats rather than 3, right? So I think that also gives you the opportunity to experiment and try to push a little harder, as opposed to, if I miss this booking window, then I'm going to miss that opportunity in the highly seasonal markets, in which case you kind of have to be a little bit more risk averse, even as a aggressive revenue manager.
Definitely. Now, Sarah mentioned something about sort of like knowing your guests, and John, you shared a little like anecdotal, what you've seen with your own clientele. Do you want to talk a little bit about that and maybe how revenue managers might want to think about their customer base changing?
Yeah. So one of the reasons why I initially, started out in Hawaii was, it's stable as a U.S., part of the United States, so all the banking and everything. However, it's actually an international market, right? So whether it's for travelers or whether you're trying to sell the real estate, I'm giving away all my secret sauces here. So, right, if there's a blip in the U.S. economy by itself, right, when it falters a little bit, then Japan comes in, Korea comes in, Australia comes in, right, Canada comes in. So there's that buffer, and that's what I liked about Hawaii as a market. Historically, we had very strong Japanese, other countries too, but Japanese as a very strong, guest travelers. Post-pandemic, and especially within the last, 2-3 years, there's been a huge drop-off in Asian travelers. And we almost don't see any Japanese travelers coming through our portfolio anymore. Maybe once in a while, but not like it used to. And so the post-pandemic was primarily the U.S. and Canadians, pent-up demand. That was really the clientele that we were serving. Now what we're seeing is, I think part of it is the Japanese yen is not very strong right now, and it hasn't been for a while. So I think that's probably keeping the Japanese from coming back. But we are seeing a lot of Koreans coming, more so than we did before. So I think this is where kind of macroeconomic, issues are impacting revenue management. So I know on booking.com, and that's typically where a lot of our international travelers are coming from, booking.com. There are ways to set rates based on the country that that people are coming from. We haven't done this yet, but we could probably set a separate rate for Korea, and then possibly even a discounted rate for Japanese if we wanted to get them to start traveling to our properties again. But it's definitely a big shift that we've seen post-pandemic. And then also we're seeing fewer Australians coming through Hawaii. So that, again, this is not big data information. It's little data. John's little data, of what we've been tracking for our own portfolio.
Oh, super interesting though. Super interesting. So we've spent a lot of time on Honolulu. Let's hop over to Kauai, where it sounds like you are starting to also have some business in this area. Now, Honolulu obviously is a big city on Oahu. For Kauai, we've actually looked at the entire island. It's obviously a smaller island than Oahu. There's currently about, about 5,600 listings, 5,700 listings. We've definitely seen a little bit more growth here than we did in Honolulu. So for comparison, in March of 2023, we were at about 4,600. So about 1,000 listings added here in the past 2 years. What are some differences in maybe the travelers that are going to Kauai, and what are sort of revenue managers having to think about in this also similarly maybe stable market, but different market in many ways?
Yeah. And jump in as you please. I don't want to just keep blabbing on, but so the way I look at this is everyone who goes to Hawaii goes through Honolulu. So the first time visitors typically go to Waikiki or somewhere on Honolulu. And then it's typically the second, third time visitors who, get familiar with Hawaii that then island hop and whatnot. So, so it's, I guess it would be kind of a smaller audience of who travels. But when you're traveling there, there's literally in a good way, nothing to do in Kauai, right? Like it's just like country, it's quiet, beach, hiking. I think
Lots of
the gas station closes at the last gas station closes at like 9 p.m. or something like that, right? So that's the kind of vibe Kauai is. So you're going there really to like get away, and not maybe some outdoor adventure. So that's what that is. I would also say you have some island hoppers, right? So if they're taking like a 2-week trip to Hawaii, then you might take like 3 or 4 days on Kauai for the zip lining or whatever it may be. In terms of revenue management, so one of the reasons why I'm personally expanding into Kauai is we were providing revenue management services for someone in the Poipu area. And their expectation, basically, given what the market was doing, they had one expectation, and we ended up doubling that in the first year, right? So there's a lot of opportunity in terms of optimizing. Like on average, you could do what these numbers show you, but if you really do optimize, you can really drive up. You could be like the top performer. And we've seen that both with 2 bedrooms and 1 bedrooms that we've managed. So I think this goes back to kind of that comment that Sarah made. I won't say it's more stressful, but I just find a lot of opportunity in these types of markets, because I think everyone settles into thinking a 2-bedroom is worth somewhere between this, and like, they're kind of capped by their bias. And I think if you can fight beyond that bias, and a lot of the stable markets, everyone, all the property managers know this is what it's, summertime, this is what it's worth. And I think depending on when you capture that booking and all that, like, you can really drive up that revenue.
Yeah, I think that's a really good point. And I think that that's probably what I was trying to get at, that you've probably explained much better and clearer than I did. But I think that, sometimes when you are in these, unstable or those stable markets, and they're non-seasonal, it's easy to kind of sit back on your heels and to just be like, this is what it is. But if you are able to, put the work in and really focus on optimizing by home, by segment, doing these things, the potential for reward, like what John was seeing with his client, is there. And, it's just a matter of capturing that demand. And to your point, John, I think that's a really good one about the whole bias. Like, we've all run into people who are like, well, no, I mean, that's way too high for this unit, or we can't go below this for this unit. And that's just something that you've put on yourself, or that you've taken on. And I don't want to say the sky's the limit, because it's not, but there's always more potential than you think usually. And I think that's the really cool thing about any market that, kind of checks some of these boxes. And yeah, so I'm letting John talk a lot because this is his area of expertise, but there are a lot of things here that absolutely apply to other areas. And it's really fascinating to me to learn about the Hawaii markets, and then to also think about how they can apply to the things that I'm doing, or the things that, the listeners are out there challenged with too. So yeah, I'm totally loving this, learning from you, John. So keep going.
No, but if you think about it, right, like, I use a lot of analogies, right? So revenue management is like driving, and just because you didn't drive on that one stretch of road that's coming up doesn't mean you don't know how to drive, right? So like we know what we're looking for, and then you make decisions based on, did a tree fall in front of the road? Okay, fine, then I have to brake, right? But that's there. And I'll say, like, for our properties, the ones that I personally own, we have commanded rates that neither I or my wife would ever pay for, right? Yet we've commanded those rates and gotten a 5-star review, right? So of course I could have placed the cap on, oh, well, I would never pay $800 a night for for a condo. But there are people who find that value, and that's really what revenue management is finding, do you want just a broad spectrum of audience and everyone's just going to book it? Or can you capture some of those unique cases that find that value in your property and are willing to pay that premium? And that's really kind of that balance that's what I think of when I think of revenue management.
Yeah, I mean, I think that the breakdown of like bedroom segment is similar in that, most of them are in the 1 and 2 bedroom in this market. I mean, that's well over the majority of the units. So, but if you were to take a look at ADR, how does that compare to Honolulu? I mean, just 2 markets that are in the same state. I mean, and this is like in any state, right? But I mean, that's where all of this comes into play. You're 2 very stable markets. How are you operating those? You have to be looking at optimizing. And if you're not, and you're sitting back on your heels, it's easy. That part's easy, how it's always been. But you can be the John on and go in there and double the expectation, and it's absolutely reasonable.
Or the Sarah Franzen.
John on has done this. He's been there, done that.
Well, so again, sharing. If you look at the ADR comparison between Honolulu and Kauai, you see the ADR is like more than double.
Yeah.
Right. Yeah. Again, now if you segment down to 2 bedrooms, like just to the 2 bedrooms, Kauai is still going to be stronger, but not by that that dramatic an amount, right? But
well, and that's to your point, though, about understanding who's coming. So you, as the expert in that market, okay, everybody's going to come through Honolulu, and that's like a lot of your first time, and then maybe repeat guests more, or people who have a different motivation are coming to Kauai. So that's understanding who that guest is too, and understanding what they're looking for. And I think that goes back to my initial comment about segmentation and understanding those guests and understanding why they're there and what they're willing to pay, because that's going to be different.
The one last point that we talked about for Honolulu for Kauai is throughout the state, Kauai's regulatory scheme is considered to have been the most durable and successful. The current mayor's very fine with it, happy with it. There have been designated areas and not in areas that you're not supposed to do it, and that's been enforced. They have a MOU with the OTAs, so things have been fairly clear in terms of what you can do and what you can't do. And I think that's another, one of the reasons why I was like, all right, this is a good place to go to. And then the final point is that in advance of any threatening actual regulation coming in, we have been able to create a local alliance powered by some of the big property managers on Kauai, so that we have that ammunition as regulation, things are going to shift. And so I think that's another reason why Kauai was a good market for me. And by the way, Hawaii is a terrible market to invest in, so stay away.
We all know your secrets now, John.
Cool. So actually one more thing, and I meant to talk to y'all about this with Honolulu too, but something that I found very interesting when looking, again, we're talking about sort of stable markets. Easter has been a very big topic in a lot of the markets, more states, or I guess mainland US. Easter is significantly later this year than it was last year. So for many markets, March is looking really down compared to what it was last year. Now, how would you say, John, would you say that holidays like Easter typically are drivers in markets like Honolulu and Maui? Because I'm not really seeing much of a spike in our occupancy here.
Just historically speaking, Easter has not been anything special. And in fact, April, March-ish on Honolulu tend to be that slow period overall. Mm-hmm. So we've never really seen that bump during Easter. And I will even go as far as to say 4th of July as well. There's a bump because it's the summer peak season. But relative to all the the week prior and week after, we don't see a huge dramatic difference for that 4 or 5 days that include the 4th of July. So Becca, you're looking at you're hovering over the pacing graph, but you see it's kind of it's elevated, but there's no peak around
Yeah, not any
around the
more
holiday.
so than any of the other dates surrounding it.
Exactly. So it's more the seasonality and not the holiday. Christmas to New Year's, I mean, it goes bonkers, right? And so that's the season, that's the part that you really it's the most intense part where you just make a lot of money in a short period of time. But yeah, like holidays are not that big of a issue to track in the Hawaii market. I'm sure there are experts way more knowledgeable than I, and they'll be like, "No, you have to be tracking it," but like we just have not seen that year after year.
No, it's actually interesting on the PriceLab side of things. When I've worked with customers in Hawaii, one of the things that has been very important to them is that mainland trends, things like 4th of July and Labor Day, all of those, they don't want any of those holidays to affect their pricing. Which luckily with the way our hyperlocal algorithm works, none of those, if the trend isn't happening in the hyperlocal market, it's not going to get put into your pricing. But that's always been just something very, very interesting to me to sort of hear from our customers. Let's hop into Maui. So Maui, I think, let's see, we'll scroll up. Sorry, I was looking through this report before. Now, of the markets, I would say Maui, maybe it's not the most seasonal, but I'd say it's more seasonal than what we're seeing on Kauai and in Honolulu. We're definitely seeing that high season spike around like January, February, and then again maybe a slighter one in June and July, but definitely a little bit different than the other markets that we were looking at.
Yeah. So I don't have direct experience in Maui, and there are lots of things going on, aside from this. But Maui traditionally has been kind of that like the resort, that mainland, like it's really highly US driven, right? And so I believe Maui's market aligns more. I'm not saying that Easter's gonna, it's gonna peak for Easter, but I think the travel patterns align a little bit more with the mainland's like overall schedule than the other islands. So, but then you're saying January's peaking, but
we see a little bit of a peak in June, July, August, but
not as much as the January.
Not nearly as much as what we're seeing, December, January, February, March. So to me, it would maybe convey that if we are looking at US travelers, this is sort of aligning with their winter breaks, their spring breaks. People who are in cold locations are maybe thinking about Hawaii as a destination during those colder times of years and not as much during maybe their summer breaks. Even though there is a little bit of a peak here in July, it's definitely much stronger, kind of in a almost like a ski area pattern in a way.
Now you also have to remember, with the fire, there's a ton that just like kind of, we're taking off, and right now there's huge regulatory uncertainty. And so I would say, looking just at last year's pattern or last 2 years pattern, it's just kind of everything is in flux right now. So it's not the other islands, I would say those patterns look like trends. Right now, I'd say this is in flux, and so we should just look at it as a point in time and not as kind of a general assessment of the market.
I think that makes a lot of sense. Speaking of the regulation, if anybody wants to learn a little bit more about what's going on in Maui, Thibaut with Rental Scale Up wrote a really great article about the vacation rental crackdown that's going on. You can find that on Rental Scale Up. but yeah, pretty serious, a pretty serious ban that they're considering doing. Looks like over 7,000 short-term rentals are potentially going to be affected. I don't know exactly how many. So it looks like this dashboard has about 10,000, just under 10,000 listings. So cutting 7,000 would be a huge impact to this market.
Can you look at the trend of the number of listings?
Yeah.
So
Yeah.
you see it. This
So
is one market where,
it's kind of just been hovering around or slightly above 10K for the past 2 years. We're not really seeing that growth that we saw in Kauai. It's almost more similar to what we've seen in Honolulu. But again, there's been so much disruption with the fires and everything else in this market. You wouldn't necessarily expect to see the same type of normal growth. I would expect.
Yeah, just everything is in flux on Maui right now, and like if you read, I have not read Thibault's article, but I will. But yeah, it's there's just a lot of political pressure, a lot of pressure from the hotels and whatnot, and like we're not sure exactly where it's going to land. However, we have so in Hawaii, we have OSTRA, which is on Honolulu, Oahu Short-Term Rental Alliance. There was MVRA on Maui. There was a group on the Big Island, and then we created a group on Kauai. And so we work collectively together as like sharing resources, sharing knowledge, sharing the lobbyists and all that. And so the outlook is relatively positive, because if you're able to fend for yourself, what we've actually become known as, at least on Honolulu, is the accurate data source. So even legislators who oppose short-term rentals often reach out to us to get like, okay, what's going on? And so we have a seat at the table. And I think that is, I'm not the data person there. There are people who are way better with data than I am. But we have some great data analysts who are showing, what's the change in supply, all that. And so we've become kind of the go-to accurate data information organization.
That's so key, because I know in many, here in South Carolina, for example, there have been a lot of regulations that have gone in without proper market studies, without proper understanding of the data. So y'all having a seat at the table, that, I mean, obviously can't like change the outcome in some cases, but at least everybody at the table is going to have a full picture of what's going on.
Well, and I think that just reinforces too. I mean, this is really great to hear about Hawaii, but it's important everywhere, right? I mean, these regulations are everywhere, and they're coming, and we all feel them, some stronger in some places than others. But getting those alliances formed and getting that together, so when it is you and it is your market, you have a voice. So I think that's great. I love to hear that, John.
Let me say one more thing on the advocacy soapbox, right? Of course, a lot of our alliances start grassroots because things happen and kind of local managers band together, right? But the perspective that I have is the hotel lobby is not driven by a bunch of volunteers who are doing it on the side, right?
Right.
They have money, and then they have like actual task forces that are advocating for their industry. So of course, it's great that people are volunteering and doing that, but that's not sustainable. So we really need to get to a point where we take advocacy as seriously as our counterparts, our opponents are, so that we can come to some fair balance and not just be ramrodded by anyway.
Yeah, like it or not, money talks.
Very true. Very true. Well, was there anything else? I mean, I guess we talked about sort of the breakdown of bedroom counts on the other one, so we can talk about that quickly. But was there anything else before we sort of want to wrap up today's episode?
There's no. Let's look at the breakdown on Maui. Let's see.
It's similar again, right?
Yeah.
Yeah, it's
one or two bedrooms.
1 bedrooms, 2 bedrooms are pretty significant. So 4,000 1 bedrooms, just over 3,000 2 bedrooms. One thing that was interesting, there was a lot of studios in Honolulu, and you really aren't seeing that in Kauai or Maui. And again, 3 bedrooms, they're, compared to 1 and 2 bedrooms, there's just so few of them in these markets. So I think this tracks with sort of what you were saying, John, more resort style, more condos probably being rented in this market. And our ADRs here in Maui are tracking similarly, even though it is a little bit more varied for whatever reasons. Tracking more similar to what we're seeing in Kauai, much higher value ADRs in the 400s and 500s throughout the years. Yeah. So strong market, kind of in flux right now. A lot of sort of things up in the air in Maui. If any Hawaiian revenue managers are stressed, it's probably our friends over in Maui of the 3. But yeah, this has been super interesting, John. Thank you so much for all of your insights, and Sarah, you as well. So yeah, I guess any final thoughts or nuggets of revenue management knowledge?
I'm sitting in Minnesota right now, and I would love to be in Hawaii. I just got a foot of snow, and I'm the person who, in that little graph in January, February, March, that's me. I'm like, I want to go to Hawaii. To John's point, that's a US driven traveler. That's me right now. No, I thought that was really interesting, and thanks, John, for sharing. Because this is a market. Well, we looked at 3 markets, but it's a state that's always been really interesting to me. And so I loved having the kind of resident expert on the call. So thanks, I appreciated it. Learned a lot.
No, I had fun talking about it, but again, like all the drivers are similar, right? Not the drivers, the issues are similar, and what happens in different markets, right? And so that's why Sarah, you're like, you take the driver's seat. I'm like, no, like you can look at the data and you can figure out what's going on, which you clearly did. So thank you.
Yeah.
I always have a fun time on these.
It's always fun talking to you. To all of you.
Yes.
Yeah, this has been great. Join us again, everybody, for our next episode of RevLabs Revenue Radar. We'll be hopping into more markets next month, and looking forward to having you all join us again. Thanks so much, y'all.
Bye.